In a decision that has sent shockwaves across the globe, the United States Supreme Court has delivered a verdict that will be studied and debated for generations to come. The atmosphere outside the court was electric, with reporters and citizens alike waiting anxiously for the news that would soon reverberate through every corner of the world. Today, January 9, 2026, the highest court in the land struck down the sweeping tariffs imposed during the Trump administration. This was not just a legal ruling, but a moment that will be remembered as a turning point in American economic history. The justices, after months of deliberation and intense public scrutiny, have chosen to dismantle a policy that has shaped the nation's trade relationships for nearly a decade. The ruling dismantles a trade framework that has defined international commerce for nearly a decade, redrawing the lines of presidential power and America's role in the global economy. Financial markets from New York to London reacted instantly, with traders scrambling to interpret the implications for global supply chains, investment flows, and the delicate balance of international trade. From Pennsylvania's steel mills, where workers have long relied on tariff protections, to Shenzhen's bustling tech factories, the consequences are immediate and profound. For some industries, this decision opens the door to new opportunities, increased exports, and renewed competitiveness. For others, it brings uncertainty, as old certainties vanish and new rules are yet to be written. The ripple effects will be felt by businesses large and small, and by workers whose livelihoods depend on the ebb and flow of global commerce. The tariffs, once justified under the banner of national security, marked a radical departure from decades of U.S. trade policy that favored open markets and globalization. Their removal signals a possible return to multilateral cooperation, but also raises questions about how America will protect its industries and workers in an increasingly competitive world. Today's ruling is not just a policy reversal, but a powerful statement on the constitutional limits of executive authority. The Supreme Court has reaffirmed the principle that even in matters of national security and economic policy, the president's powers are not without bounds. This decision will likely shape the relationship between Congress and the White House for years to come, setting a precedent for how far executive action can go in the name of national interest. As global markets react, leaders worldwide scramble to understand what this new era of American trade will look like. Economic summits are being called, emergency meetings are underway, and business leaders are watching every development with keen interest. The uncertainty is palpable, but so too is the sense of possibility. A chance to forge new alliances, renegotiate old deals, and redefine the rules of engagement in the world economy. The world held its breath for this verdict. Now, it must deal with the consequences. As headlines flash across screens and analysts debate the future, one thing is clear: the Supreme Court's decision marks the beginning of a new chapter in the story of American trade, one whose outcome will be written by the choices made in the days and years ahead. To truly understand today's Supreme Court decision, we need to journey back to the very beginning of the Trump tariffs, a story rooted in law, politics, and global economics. The origins of these tariffs are not just a matter of recent history, but a reflection of decades-long debates over American industry, national security, and the country's place in the world economy. In 2018, the Trump administration invoked Section 232 of the Trade Expansion Act, a rarely used legal provision, to impose sweeping tariffs on imported steel and aluminum. The official justification was national security, arguing that America's ability to produce these critical materials was at risk. President Trump framed the move as a bold step to protect American jobs and industries that he claimed had been hollowed out by decades of unfair foreign competition. The response from America's closest allies was swift and sharp. Countries like Canada, Mexico, and the European Union, long-standing partners in trade and security, saw the tariffs as an affront. They retaliated with their own tariffs on American goods, from bourbon to motorcycles, igniting a rapid and escalating trade war that sent shockwaves through global markets. The conflict soon widened. The Trump administration expanded tariffs to cover hundreds of billions of dollars worth of Chinese goods, citing unfair trade practices and intellectual property theft. This marked the beginning of a prolonged and bitter standoff with China, the world's second-largest economy, further straining international relations and supply chains. Supporters of the tariffs argued that these tough measures would breathe new life into American manufacturing, create jobs, and restore the nation's industrial might. But critics warned of unintended consequences. higher costs for businesses and consumers, disrupted supply chains, and lost export markets as other countries imposed their own barriers. The result was a period of intense economic friction and diplomatic tension. The tariffs became a lightning rod for political debate, dividing lawmakers, business leaders, and the public. Some saw them as a necessary defense of American interests, while others viewed them as reckless and damaging. Across the country, businesses, especially small manufacturers and farmers, struggled to adapt to rapidly changing policies and unpredictable costs. Economists and analysts debated fiercely on television and in print, trying to measure the true impact of the tariffs on growth, jobs, and America's global standing. All of this legal, economic, and political turmoil set the stage for a dramatic showdown in the Supreme Court, a pivotal moment that would determine the future of presidential power over trade and the fate of the Trump tariffs. The legal battle that led to today's ruling began with steel importers challenging the Trump administration's use of Section 232. They argued it gave the president unchecked power to impose tariffs, essentially usurping Congress's authority to tax. The core issue: whether the law's vague national security justification violated the non-delegation doctrine. The government insisted presidents need broad authority to protect national interests, but lower courts grew skeptical as evidence of economic disruption mounted. The Supreme Court ultimately agreed to decide where presidential power ends and Congress's begins, reshaping the boundary today. In a 6-3 opinion by Chief Justice Roberts, the Supreme Court sharply limited the executive's use of Section 232. The court ruled that national security cannot be stretched to justify broad economic protectionism. Future tariffs under Section 232 now require direct, credible link to national defense. The majority's decision dismantles the legal foundation for the tariffs, forcing Congress to reclaim its role in trade policy. Dissenters warned the court was overstepping, but the majority insisted Congress, not the president, must set the rules. This verdict marks a major reassertion of congressional power and a check on the presidency. Wall Street's reaction was immediate. Stock futures surged, especially for companies reliant on global supply chains. Ford and GM shares jumped as steel and aluminum prices fell, but U.S. Steel and Alcoa tumbled, facing renewed global competition. Farmers cheered as hopes rose for the end of retaliatory tariffs and reopened export markets. The dollar weakened, reflecting expectations of increased imports. The administration, caught off guard, now scrambles to recalibrate trade strategy. Billions shifted between industries. Importers gained, protected domestic producers lost. The sudden removal of tariffs has triggered a complex, painful adjustment period for many sectors. The numbers tell a stark story of winners and losers in this new trade landscape. America's allies greeted the decision with cautious optimism. EU leaders called it a step toward restoring a rules-based trading system, while Canada and Mexico looked forward to normalizing trade. Japan and South Korea welcomed the move. China's response was more guarded, urging the U.S. to end protectionist practices but vowing to defend its interests. The EU signaled it would lift retaliatory tariffs quickly, but U.S.-China tensions remain unresolved as other tariffs persist. Developing nations expressed relief, hoping for a more predictable trade environment. The World Trade Organization hailed the ruling as a victory for multilateralism. The decision pressures all sides to de-escalate trade conflicts and return to negotiation. Yet, the largest disputes, especially with China, are far from settled. The Supreme Court's decision has ignited fierce debate in the U.S. Free trade advocates and importers celebrate lower prices and restored certainty. Labor unions and manufacturing groups condemn the ruling, warning of job losses and renewed foreign competition. Industrial towns brace for layoffs, while the broader economy anticipates lower costs and increased trade. The political fight now shifts to Congress, where new trade protections will require legislative consensus. The ruling reshuffles the political deck, making trade a central issue in upcoming elections. Communities dependent on tariffs face tough transitions, demanding new support from lawmakers. The battle over America's trade future has entered a contentious new phase. Economist Dr. Emily Vance describes this as the most significant trade ruling of the century, a decision that will echo for years to come. According to Dr. Vance, its impact is not just immediate, but will shape the very foundation of how nations approach global commerce and economic cooperation. She argues that this landmark decision effectively ends the era of unilateral, executive-driven tariffs, a period marked by rapid policy shifts and uncertainty for businesses. Instead, it restores Congress as the primary force in shaping U.S. trade policy, returning the power to elected representatives and, by extension, to the American people. This shift is expected to bring more transparency and accountability to the process, as trade decisions will now require broader debate and consensus. With Congress at the helm, the rules of the game become clearer. This new predictability encourages long-term investment, as businesses and investors can plan with greater confidence. Stability in trade policy is likely to foster economic growth, job creation, and innovation, benefiting not just corporations but workers and communities across the country. Yet, Dr. Vance cautions that the underlying causes of protectionism, such as wage stagnation, job losses in key industries, and concerns over unfair foreign trade practices, remain unresolved. These deep-seated issues continue to fuel public frustration and anxiety, especially in regions hit hardest by globalization and automation. Without meaningful solutions to these challenges, political pressure for new trade barriers will persist. Lawmakers may seek subtler ways to protect domestic industries, such as regulatory hurdles or targeted subsidies, even as overt tariffs become less common. The debate over how best to balance open markets with economic security is far from over. On the global stage, the ruling creates a rare window of opportunity for the U.S. and its partners to modernize trade agreements and revitalize the World Trade Organization. By working together, nations can address emerging challenges like digital trade, climate change, and supply chain resilience. This is a starting point, not an endpoint. The hard work of building a fairer, more inclusive global trading system begins now. It will require cooperation, compromise, and a willingness to rethink old assumptions. The decision sweeps away failed policies of the past, but the future will be shaped by the choices made from this moment forward. The path ahead is uncertain, but the potential for positive change has never been greater. Today's Supreme Court decision is a watershed for the global economy. By striking down the Trump-era tariffs, the court has redefined American trade policy and the limits of presidential power. The immediate market chaos signals a deeper realignment. Diplomats must now rebuild trust, businesses must adapt, and Congress must confront the nation's trade divisions. The questions of fair competition and worker protection remain unresolved. The era of unilateral protectionism is over. What replaces it is still unwritten. The world is watching to see what America does next.